Okay, guys, let's just start. Very good afternoon, good evening to some, and welcome to today's live geometric trading market outlook. And today is the 20th of March 2017. A lot to talk about today. Welcome. But before anything else, as usual, let me just read you the risk disclaimer. Not very long, just a couple of minutes, less than that, probably seconds, and as opposed to minutes. Okay, so here we've got a risk warning here. And just want to go through this. Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all the invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. That's it. Okay, thank you very much for that. So let's just get to it now. Onto the chart. I think I've got some questions as well. Volume. Yes. Okay. Let's just do that. Volume. Let me just increase the volume right there. Let's see whether that helps. Just do everything here. How's the volume now? Is it better? Let me just check that out as well on my end. Is volume better? Still the same? Still the same? What about the rest of you guys? You guys can hear me loud and clear? Because I think I've got it here quite loud and maximum here. Not sure whether that's at your end or not, Sasi. Okay, let me just check this out here again. Let's look at volume. It looks like it's maximum here at my end. I think it's better now. Is it better now? Loud and clear? Yes, better. Yeah, just to confirm, better, yeah? Okay. Loud and clear. Brilliant. Good. Okay, there we go. Let's start. So I guess you guys are wondering about, markets at the moment, giving a lot of uncertainty, a lot of things are going on. I must, before anything else, I must just read you through a couple of, opinions, suggestions on the trend side of things. Before that, of course, geopolitically, we may see perhaps further weakening of the dollar, the US dollar, mainly because we've got the South Korea thing going on with Trump, Trump's reaction to South Korea, and we've also got Trump's reaction to the Eurozone, especially through to Germany or Merkel. So we've got a couple of geopolitical sort of rifts or a little bit of complication there that might, come out through the media, showing some sort of not very positive type news regarding the position of their relationship. So this might actually hit the dollar a little bit more. But before that, let's just go on to trend-wise. Now, trend-wise, as of this morning until now, I would say the whole of the day, we're looking at three main or three strong currencies, including Australian dollar, the euro, and the GBP. These are amongst three pairs that are on the strong side. Then we've got weakening side, JPY or the yen, USD, and CHF. Okay, but here we want to look into overall. What we are looking at is the euro is generally stronger. Okay, but it's generally stronger against. It's generally stronger except for Australian dollar and the New Zealand dollar. So we want to check why is that the euro is actually stronger with the rest of the pair, but the euro seem weaker compared to commodity currencies. So commodity currencies are Australian dollar, New Zealand dollar, of course, and the ZAR, as well as the Canadian dollar. These are commodity currencies. So, but the one that is clear is that it's strong, but it's not strong compared to Australian dollar. Australian dollar and New Zealand dollar is stronger than the euro. Okay, now that is the same case that goes on with the GBP. So GBP is stronger, the same like euro, but it's stronger, but except for Australian dollar and New Zealand dollar. Okay, now USD is still seen, of course, like I've mentioned earlier on, weak across the board. Okay, and this is what's going on the overall picture. I want to take a look at Euro JPY in a bit, because it may pose some opportunities there with the Euro JPY, and I like trading the Euro JPY especially on a Thursday, but because this week it started on a Monday, that it's giving lots of interest by investors on all time frames. They are looking at buying the Euro JPY, and we are looking at a medium term rise from the 109.20 area, but we want to look at whether it has hit that 109.20. Where is it compared to the 109.20 area? It's also a psychological number, and it's also an area that the investors and banks are looking at too. Okay, so the focus is also on the 126.09 resistant area. Okay, I would like to also talk about USD CAD to the upside. There is a pattern there. They're giving me some hints that there may be a room to the upside by a USD versus the Canadian dollar. So that does actually mean that it's suffering with the Canadian dollar. So is it because of price of oil as well going down? So this is what we would like to look at as well. And then gold, we will look into gold as well, and we're looking at on the 4-hour chart, there's a pattern there trading from D to E. That means to the downside. So would that then confirm the USD strength? Okay, so this is just a summary. What we'll talk about. Let's now get into action. Let's look into that. So we have got USD JPY as the first request amongst the major. So let's look into what's going on with the USD JPY. So before anything else, let me just delete all the mess that's on the screen so you can see it just clearer, okay, without all the lines, all the other lines. So here itself, I mean, on the 15 minutes chart, we want to build a story, let's say from the 5 minutes chart itself. Okay, so here it's important for us to start on a lower time frame so we can actually look into what is building up. What's building up, it may actually be for the short term a downside move. Now look at the price there, 112.69. If 112.69 is traveling to the downside, that means it will meet the closest psychological number of 112.50. Okay, so if you would like to look at more downside pressure, it's now actually under the 3 lines. It's got loads of participation now to the downside by all these bearish candles, and you can see that the dominance are by bearish candles are trying to pull prices down. So the next level I would look at is 112.50 because it's a psychological level. I need prices to go under 112.50 for me to get a better idea of a downtrend or a downward momentum for the USD JPY. Is that really happening or not? We need to build that story, and we need to go up to the 15 minutes, 30 minutes, 1 hour, and so on and so forth, so we get that how do you call that, a consistent story or a build-up of a story to give us an idea of the trend. Okay, so at this moment of time, let's just now go back and look into the 15 minutes chart right here. Now here is the what do you call that? Oh no, it's 112 there. You've got 71 here. Let me just confirm that and go back to 5 minutes right here. 70 area. I think I've got the price wrong. 112, it's under 80, so it is actually giving us a bit of a hint that it prefers the downside because it's gone under the 80 psychological number. I do apologize for that. So it's 112.70. So it's closest to 112.80 psychological number, not 50. Okay, so here, yes, it's gone down, it's gone lower. We need to look into whether or not the 15 minutes chart is supporting that. Now look at what candles are doing. Candles are under the 3 lines. Market has actually opened, the next candle has actually opened just there in the same length there as the closing price of the previous candle. It's got a little bit of looks like an upward type candle or a bullish, but then we'll never know at this stage. But it's got challenges for sure. It's got the 50 moving average and the 100 moving average as the resistance area too. Okay, so you can see that the bias is still to the downside. What about the 30 minutes chart? Now when you look at the 30 minutes chart, building it up again like a story, you could see that that momentum may be picking up. You've got a stronger look of candles as well. So it is building to the downside much more than it is building to the upside. Here itself, you could see dominated by many candles to the downside. Okay, now when you zoom in, when you zoom in a little bit, you need to always keep a sort of one eye, especially on the left, to look into the left area always. If you have got a resistance here, look to the left, it may find support here or resistance as well. So if I look into this peak here and draw a sort of what do you call that, zone based on the highest body and the highest wick, you can see that it always will mirror most of the time something that has happened in the past. It will always give you another story to connect with it. So here, yes, it found resistance, but in the past has also found support. Okay, as we go into the 1 hour chart, you could see when you look at price now, or the most obvious resistance or support, always look to your left as well, just to see whether you've got any connected story with it. Okay, so here, for example, now prices definitely going to the downside, right? It looks like to the downside even on the 1 hour chart. Okay, but always think about risk. What is the risk of it going up? Okay, look left and you will see that at this price at 112.70s area, it's got a major support area as well. It's got some support here, pushes prices upwards. It's also got some more support here, but again, it's got support here and got various other support area, hence the reason that is an area to look at. So if I choose one of the area here closest to the to any family of candles that has showed me some support, let's say even this one here, I could easily draw a zone. So I get a bit of a support zone. So if I choose the lowest body and then the lowest tip, then I could see that you've got support area here, well supported within the zone. So now, if you're looking into 112.69 area, then we are looking at prices sort of trading in a trap zone as well in within this zone here. It is a support zone. It also could easily be a resistant area as well. So this area here has also been pierced through by very big longish candles as well, you know, and these candles like the bearish one or the bullish one, this gives you an idea that this zone has been drawn properly or correctly. Okay, so now you would get a better picture in terms of trend. Now if we look into USD JPY, you are in the zone, in within the zone. If you are in the zone, you are in balance. So prices is in balance between bullish and bearish. You need it to break out of that balance in order for you to gain, to look into the momentum, because once it's got a momentum, then you're looking at the possibility of gaining. If not, you don't gain anything. Okay, because it's just moving sideways like this, for example, or in within a range. Okay, so you want that to break out between 112.76 and 112.60. Now the 112.60 area to the downside, the thing is that to the downside is the 50 area. Okay, so let's just mark that as well. So 50 area. Okay, there you go. So you've got 50 area marked there. When you mark that 50 area, suddenly you see to the left, you look to the left and you see that you've got some concentration of candles like that. That's a good sign. It found support at that level there, which is close to the psychological level. So you've got 112.61 here, you've got 112.50 here. Right? Then you've got 112.76, which is basically closest to the 80 zone. So you see what's happening. The prices at 112.70 is actually sandwiched between two psychological levels as well, at the 112.80 as well as the 112.50. So it's got quite a huge range, you know, not really that big in terms of the price wise, but if you mark all that area there, that could easily be a sort of a confusion zone. A confusion zone that the traders have put other traders into. So you and me looking at it, wouldn't actually realize that we're actually in the mix of a confusion zone. So what does that actually mean? If we go into the 4-hour chart, what that means is that if you want a better clarity of mind, you need to wait until prices go out of that blue box. So that blue box that we've just drawn is a range of prices trading at, but then it's causing confusion. So you want clarity of mind, a better idea on trend direction. Prices needs to go under or above that blue zone. It needs to go above the 112.80 psychological number or go under the 112.50 psychological number. Only then it gives us a bit of an idea of a better trend. So in other words, above that zone, a better clarity to the upside or bullishness, and under that box, a better clarity to the downside or bearishness. Okay, so at this moment of time, it is difficult, challenging to know the area, even though it's the bias is to the downside. The bias is to the downside on the 4-hour chart because you've got candles under the 3 moving averages. But apart from that, you've got too many dominance of the bearish candle here, as you can see, more bearish candle. And when prices are going down, you see that the correction, these corrections are getting less and less. That actually means that the bulls are weaker. They are not pushing the prices up so much, but what is dominating the whole scenario are the bears, the sellers. So here I could safely say USD JPY, it's biased to the downside, a lot of pressure. But in terms of having more faith, will only be fed, our faith will only be fed to the downside once it breaks out of that zone beyond the confusion area. Okay, so that's a USD JPY. Let's just also look into let's also look into the daily chart right there. Let me just zoom out a little bit, look at it from a bigger perspective. Here itself, you can see that it's definitely in a confusion zone. It's got all these 3 lines there. I think I've got hands up right there. Let's just see. Give me a second. Hi there, Jaya. You've got a question, maybe? You've clicked on through the hand there. If you've got a question, easily type into the chat box there. Okay, I'll be happy to help. Got any question there? Hope you guys all can still hear me. Okay, so here we've got confusion zone still. Okay, it's uncertain even on the daily chart. It's difficult, or it's risky actually to say that the USD JPY in the daily chart could actually go up or could actually go down. No, there's no actually can do that or this, because it's in between the 3 lines here. The 3 lines, the 50, the 100, and the 200 moving average, is giving you that sign of confusion. It's not marinated into the market as a clear direction. Okay, if it's not giving you that clear direction, that means it's difficult for you to be in a momentum trade. When you are in a momentum trade, that actually gives you a better, it's like a marathon run in a trade. Okay, if you are trading a range within a range, for example, that's more like sprint running. So they are different types of run, different types of personality type, and different trading styles. You need to understand what type of market you are in. At this moment, you are in a range market. So within a range market, or sort of like a sideway or a range of price, that requires a kind of strategy that would actually be fitted to a range type trading, maybe short term, because it's within a range, it's within an area that wouldn't give you that long haul area to actually trade. Okay, so this is very important for you to understand what market are you in at this moment of time for any particular instrument. Okay, as we go on to the weekly chart, you can see price is still above all 3 lines. You go onto the monthly chart, you can see it's still way off. So daily, weekly, let's say weekly, monthly, it's still giving you that upward type momentum. Okay, so what does that mean? If you've got weekly, a couple of months down the road, even 6 months, 8 months, is still giving you the chance to think that there's a lot of room for USD to go up. That actually means that it may correct itself to the downside on the shorter term. but again, it always will be on a zigzag type move. So you need to look for patterns, and you need to look for patterns but understand the overall trend. Okay, this is just for the USD JPY that we're talking about at this moment of time, because we're looking at the price and everything else. Okay, but we will move on to the other pairs as well, and so you will get a better idea on the overall. So here, daily chart, let's move into lower time frame for the USD JPY and start looking into the possibility of patterns. Now here, perhaps it still needs loads of how do you call that, movement to the downside to create patterns perhaps, but here, for example, you may have a potential A to B move down, and then B to C went up, but again, that C point didn't really touch any one of the moving averages right there as well. Okay, so if we go on to, let's say, very short term, let's say 15 minutes here, look into that, and it's actually in the range right here. Okay, now this is not too bad here perhaps, but it's not possible for me to look into where the 100 moving average is, so I'm just going to move this box a little bit. Okay, so we can actually look into that range area. Okay, so it didn't actually really touch that area right there. Okay, so I'll just elongate that. Okay, and try to look into the 3 minutes chart, perhaps look into that. Now, for me personally, USD JPY, it's not giving me that that comfort or that comfortable feeling in participating in this trade for the USD JPY, even though you've got a bearish bias. I prefer to trade it conservatively, to wait for a bigger chance opportunity of a momentum. So like I've mentioned, it's better to wait a little bit more once it goes under the 50 area, like 112.40, or better still, if it goes under this box. And under this box means that it goes under the 112.50 area, so that would be 112.40 area anyway. So that would be a better play, a better strategy of the market for the USD JPY, whether it's a short or medium term, is to look into prices going lower at this stage. It is not a very safe zone or area to trade, especially with price action. It is at 112.67. Bias is to the downside. If the bias is to the downside, we need prices to be lower. Okay, not higher, lower at this stage, to give us a better idea whether we've got participation by sellers. Okay, let's stop that with the USD JPY, because it's just more a strategy on the price and a wait and see kind of thing for now for the USD JPY. Okay, so especially with the price. Now, with the let's just look into the AUD. I think it was the AUD JPY, if I'm not mistaken. So let's look into the AUD JPY as well. We've got AUD USD here, but I want to talk about that as well in a bit. So we'll go on to AUD JPY first. We've got gold right there, GBP AUD. I want to talk about that too. I want to look into that potential right there, GBP AUD. Let's just go on to USD JPY here and change that to, I think it was AUD JPY. So AUD JPY right there. Let's look at what's going on with the AUD JPY. So AUD JPY right at the first glance, I cannot see the other line. I've got my 200 moving average here, exponential. I've also got the 50, but I don't have the 100, so I just want to insert that one as well. I always work with a set of 3 moving averages to give me an idea of trend. Okay, I don't actually look into crosses or anything like that. So I had the 50, 200. Now it's the 50, 200. I need the 100 right there. Okay, so there we go. So we've got that now. Now you've got prices immediately, just at a first glance on the 5 minutes, you've got that within the uncertainty zone, because it's in between 3 lines. It's not above all 3 lines or under all 3 lines. So let's go on to 30 minutes, see whether we get a better picture or not. We need a clearer picture. Now here, a little clearer, meaning we've got candles above all 3 lines. That's good, but then prices is looking like it's correcting itself here. So let's just look into the 1-hour chart as well. As we see it here, it's got less corrective, but when we go onto the 30 minutes chart, it's got more correction to the downside. It's coming down more, but when we go onto the 1 hour chart, it's coming down less, as you can see, yeah, visually. All right, so let's go onto the 4 hour chart. It's coming down even less, only one candle right here. Okay, as we go on to the daily chart, it's got almost no movement of a bearish candle at this moment of time. So what does that mean? That means that the bearishness may be hinting us of a weakness. So there's more to the upside kind of momentum for the AUD/JPY. Okay, so here you could see that that angle is also giving us more potential bullishness for the AUD/JPY, especially on the daily chart. When we go into the weekly chart, it's just trying to peak out or break out of that 3 moving averages. There again, you've got that upward momentum. So here, for example, with the trend as well, you are combining at this moment, if it is AUD versus JPY, you're combining a very strong bullish like pair currency, which is the AUD, with a very weak or weakening type currency, which is the JPY. So this is a sort of a good mix, because here we are looking at potential to the upside AUD/JPY. But let's just go on to the 5-minute chart again. I want to look at prices. I want to look at how the shapes are of these candles, making out a pattern or not. Now you're looking at all this support area. Now it's in between the 5-minute chart. So let's just go on to, let's say, one of the chart that has got a better position of the candles to the upside, or the under or above all 3 lines. Now here, looking at the price itself, it's 87.05. So immediately what you can then do is to type out the closest psychological number that the price is closest to. So 87.04 closest to 87.00. So we keep that in mind. So what does that mean? That actually means that the price is just too close to that psychological level. We'll mark that one there. Okay, so it's 87.00. So we've got 87.00 as as the psychological level to be aware of. Okay, now I want you to always look to the left. And when you look into the left, look at structure of the candles, look at how it behaved in respect to the 87.00 area. Have you found any on the dot resistance, any on the dot support? We've got some support here, some resistance here as well, and we've also got the line, the 3 lines right there. You've got some very nice resistance right there, but not too much. But you've got one that went on very well from that angle there, and even better, the one here. So you see, everything has got a story to tell in the past. Okay, so you have got that. Let's say I'm taking this area here as the family of candles that I wish to draw my support resistance zone. So I've chosen the highest body and then the highest wick. So now I've got that one drawn only based on the 15 minutes chart. Okay, so I've got that zone there. Now once it goes under that zone, it's giving me more and more. If prices were to travel under, stronger, under the 87.00, then it's giving me a very nice, like what's happening right now in the live market. As you see it now, the 15-minute chart is just giving you that momentum. The momentum is building up to come lower. Prices is just trying to go lower, but you do have the challenges of this line here, because anywhere in within the lines, it could either be a resistance area or a support area. So if prices coming down, it could potentially find support at either one of this line as well. So yes, the bias is to the downside, but then you've got that zone drawn out, which is a very I would say a stronger resistance zone than it is a support zone right there. Okay, so because you've got all this fall of prices as well. As you go into the 1 hour chart, you get a better picture. You could see that fall happened there. You've got some more falls happened there. So you've got a very strong resistance area that we have actually marked in a very good strong one that was governed and dominated by really strong sellers right there. And that angle has dropped at a sort of a 90-degree fall. okay, all the way down to a 6 o'clock kind angle, which is very, very strong to the downside. Okay, so we had previous support there as well. We had got all these long candles through. When you see long candles piercing through that support resistance zone, that marks a very strong support resistant zone or area, because a support resistant zone or area, it's very similar to a wall. If you got this strong candles piercing through, that means that it's a very important level to look at. And then when it's proven here time and time again, as I go back and back and back, you could see that you've got huge falls coming down like a waterfall from that area between 87.00 and 87.05. So let's make that 87.10 or 87.20, because 87.20 is your next psychological level. Okay, so I'm going to put that at 20. Okay, there you go. So 87.20, 0.20. Okay, so as I push that down, you can see that you've got that zone right there. Okay, so that is more, that is a better zone. See how it found that resistance right there as well, very close to that psychological number of 27.20. So I would safely say that this is the zone to look out for. The more prices has actually fallen under 87.00, I would say, let's say 86.90 or 86.70, then you have got a better bias to look at the fall for AUD versus the JPY. Okay, so AUD, as I've mentioned earlier on, you've got we've talked about this, right? We've talked about the trend, but then on the trend side of it, AUD overall is actually on the upside, but this is AUD versus JPY. Hence the reason it's very important for you to treat every pair as an individual pair, and an individual pair with its own personality type. Why? Because if you combine AUD, which is a commodity currency, okay, you combine it with a JPY. JPY is sort of like a safe haven or an investors type currency that they would invest into when there's geopolitical risk, when there's a lot of other areas. Now here we know that geopolitical side has got lots of tensions and various others between the states, with Korea, the states with the Eurozone, the states with almost everybody. So we've got that tension building up. Now when it comes to investors, when they've got these tensions building up on the geopolitical ground, they may be feeding more the yen, meaning that they may be looking into the yen as a safe haven type investment at this moment of time. So you've got that, and it concerns Korea as well, and all that. Okay, so here, because of the threat at that side of things, that may actually be a reason why we're looking at this fall live now, AUD JPY 1 hour chart dropping. But as it drops, it's finding some sort of a challenge there at either one of this line. If it does pierce through either one of this, then you've got a very nice downward momentum. Okay, and then it will be a better free fall all the way down. But here itself, the bias is to the downside. You just got too many support from the sellers. Okay, not support zone, but support from the sellers, because once they've crossed that area there, you've got all these previous sellers basically just giving that momentum to the downside. Okay, so now it's 86.97. Let it go lower to 86.80 area to help you be aware of the psychological number. As it goes lower than 80 towards 87, 86.70 and lower, then you've got a better play of the market by the sellers. Okay, and the sellers would then just push prices, pull prices further down. Okay, so let's look into this area as well. Now here, for example, just looking at AUD JPY at a glance, there may be a potential of a Z-like pattern, which I will just draw very quickly here for you. Okay, there is a potential to the downside here. Okay, and this is usually coming down to a 50% Fibonacci level of this big move. So let's just do that once more neatly using the trend line right there. So if I just pull this one all the way up there, okay, and then I take this one here all the way down here, okay, and I'll pull this one all the way to the top, and I'll mark the 50%, which is here. Okay, so that 50% is a level, potential level of where it could fall. But let me just pull the Fibonacci first from this tail area, the AB leg. Okay, it looks like a Nike sign now, yeah, or a tick. So if I pull the Fibonacci from this move, okay, all the way down, let's look at where it landed. That area there didn't quite land on the dot of either one of the Fibonacci. Okay, so this does also give me a bit of an idea that price may fall higher as well. Okay, but here it's just may go up higher as well. So here it's a risk at this moment of time. Yes, you've got all this resistance and everything else playing, but let me just give you a bit of an idea, okay, of what I'm talking about. When I pull the Fibonacci all the way from here to here, I would like to mark higher levels, like for example this 1.618, okay, and maybe the 200, okay, right. Now, as I go up, this is still the AUDJPY. I just want to give you a bit of an idea of how geometric pattern actually works. Okay, so here, for example, let's look at this. You could be the judge for that, of whether or not it will have the chance to go higher. Now, the reason why I say that, let me just get rid of all these lines first. Okay. Okay, now I'll take usually AB, it sort of equals CD as well. Okay, so let's just tidy this one up. Okay, so we'll take one of this line away. Let's just mark it properly, A to B, and I want that the second line to equal that line too in length. Okay, so I'll take that. Oops, it's not doing that for me. Okay, let's just do that another time there. Okay, so what I'm trying to say is that we've got the, let's do this. Okay, let's do that. All right, now, oh, I think too many. Okay, there we go. So what I'm trying to say is if it moves higher, if it does move higher later on and finds support at either one of the line, and then it's got a chance to move at either this line here or this line here. Now, if I pull my Fibonacci to this line here, then I would get that white line not reaching 50% on the dot. But if I go on higher, let's say, and let's say price from this area managed to come down and bounce up and goes higher to this area, okay, then you see that that white line there gives me a 50%. Okay, so what I'm trying to say is that there may be a potential. This is what you find on the USD CAD, if I'm not mistaken. There's a sort of pattern like this too. Okay, so what I'm trying to say is that if it does come downwards, may not, it may actually not go through too much to the downside, may find a bit of support either one, because you've got three challenges here. You've got challenges by the 50, the 100, and the 200 moving average. Okay, so you might find a support there, but if it does find a support, because AUD is still actually strong at this moment of time, so is the NZD and the other commodity currencies. So here we find a potential of a reversal. So this may only be a correction to come downwards. So you need to be very careful with the 3 moving average here. If it does go upwards and then it goes beyond the 87.00 and above, then you might find the potential of it reaching the 88 area, 88.00, which is this one here, 87.95 area, let's say. So there may be a potential to move up there. Okay, or if it does move higher and then reverse, then you need to look at this area here as main resistance. So now it's all well and good on the 4-hour chart, it's finding that downward momentum. Okay, but for me, I don't see it a very good selling price anyway, because it's at 86.98. I need to look at 86.80 and below. Then I could look into the 86.70 area as my sell, but I wouldn't want to sell anyway, because as it moves lower towards the risk area, which is either one of these areas. So my plan is not really to sell the AUDJPY. My plan is to actually buy, but it needs a bit of waiting for that to happen. and that is because of the current trend, and the possibility of just a correction now. And of course, geometrically, it looks like there is a pattern like this, which is actually a potential Z-like pattern. Now that Z-like pattern will remain as a Z-like pattern like that, but once we actually combine these areas here, you've got a center point as well. It looks a bit like a bow tie at this moment of time, yeah? So that area there where the center point is as well, it's a very crucial area, 8690. As you can see, resistance right there, you've got resistance, everything else is marked very well in that area too. Okay, as you combine these lines, for example, you've got perfect geometry right there. Okay, now as you do that, when you get that rectangular type geometric shape, you can then also rely on this area here. Okay, this lower part of that geometric pattern, and the upper and lower part. So guys, as your channel area. Okay, so here you go, you've got that channel area right there too. Okay, now as you cross it out, there you got your center, sort of like a center point area for you to look into the border area. So this border area 8690 and below may actually mark a stronger downside move, but again, it's got challenges, like I said, by the three moving averages. So what usually happens in a shape like this is that at the center area may be a place where it might find a bit of a support. If it does find support before the three moving average, that means you've got some participation by the buyers to go upwards. So not at this stage. It's still not a good price. I would look into buying only at 87.10, and I would look into selling only at 86.70 or even below. Okay, so this is what's going on with the AUD/JPY, guys. Now GBP USD, what's going on with the GBP USD? Now here, as we look into that, let's just look into what's going on. We're looking at a 1 hour chart. We can see movements right there. Let's get rid of all these previous prices that I've written, and also the previous line. Okay, there we go. Now here, for example, as I zoom out, I do see a potential Z-like pattern too, but the B2C area may not actually be, may have completed or not. We're not really sure, but I'll just show you that. We'll just focus on the 1 hour chart first. It's got some kind of support going on here. That's a rejection candle to the downside. So hence the reason you see an upward momentum. So there's some upward potential for the GBP USD from what I can see here, but not very long maybe. Let's just analyze that from a Z-like pattern perspective. Let's just say that I pull this A to B move here, and I look at where it has actually landed. Now it has landed at the 224 area, okay, which is quite a nice area for it to land in one of the Fibonacci extension level. Okay, now if I get that area there and I put it there, okay, and I draw again the second line right here, that gives me the A to B equals C to D of a Z-like pattern. Okay, so I'll get rid of this one here, and if at all I pull this one all the way up here, do I get that white line here close to the 50 area? Not really, it's just there. So if at all it's coming downwards, it will be again challenged by either one of this line. Now these three lines is signaling a lot of momentum to the upside. That's the problem. Upside momentum. Why? Because these three lines are still far apart, pointing upwards in a very nice angle, showing us some, telling us, screaming to us the idea that there may be an upward momentum going on. There's some participation by the buyers. If I go into the 4 hour chart, you can then see, let's get rid of this for a while. Let's put it just at the side here. Okay, we'll use that later on. You can see that it's above all three lines as well. Okay, now this is where I would like you to pay more attention. It's on the upside above three lines. We're looking at the 4 hour chart. As it moves up, you look to your left. As you look to your left, you've got areas that it it may find resistance. Now, when you look left, that area, if you're looking at this area here, okay, highest body here based on these candles here and the highest wick will give you that zone. Now, that zone, if you marked, look in within there itself, it's just having got a lot of concentration thinking area because you've got lots of candle concentrated in that area. As you go on and zoom out, you can see that that is the area. That is all the area of a lot of concentration of price as well. Look at this area, okay, and look at this area here. There's a lot of thinking going on. There's a lot of thinking, a lot of balancing, and everything else goes on in that area there. So you just see you see that is a clear area here, but this is a thinking area and another thinking area. Okay, as you pull prices on the daily chart, you can see that you don't have much activity anywhere else but this area here. Okay, so this is an area to look out for. We need to wonder what is going on at that area there. Okay, and that's an area for you to also pay a lot of attention for resistance as well, because here prices has fallen like a waterfall from that area right down, and that is actually quite a significant move because you've got prices from that angle right down here. That's 300 over pips. Okay, 360 plus pips to the way to the downside from that zone. Now, when you have drawn that zone, you can actually then see that prices has gone lower than that zone now. So that is showing you've got all these lower highs. So that's a high, lower than that one, and this one here lower than that. So that does give me a bit of a hint that the market prefers to go to the downside as opposed to the upside at this moment of time. Okay, so here as you see, it's trying to reverse to go upwards, but that one there is just a nice downward move. Actually, you just got all this thinking area and then prices fell down much more. So it is still looking like the bias is to the downside. This one here on the daily chart, just finding resistance on the dot at this moment of time. It's also in a confused sort of uncertain state on the daily chart, but it found resistance right here. Will it actually then go above and find another resistance here? It's a bit too far or a bit too soon to tell. But as we go on to the weekly chart as well as the monthly chart, it's just screaming out aloud a lot of downward momentum. Bearishness is just ruling at this moment for the GBP USD. Okay, there's a lot of bearishness right there. This may be a pole and flag pattern right here as well. This is based on the weekly chart. Okay, so as you go like this, for example, okay, this is the flag. This is the flag, upward type flag. Okay, to the downside. This is based on the monthly chart. Okay, usually it breaks downwards, then you see that this whole movement could be the same length as that movement there. So all you need to do is pull that one there, double click, and take that from the top area right there and look at the potential. Potential is still looking like you've got downward. Of course, this is on the highest time frame there, meaning the monthly chart, but then as a root, you could see that it's following through that. Okay, it's following through. So if I take that away, you could see that it's just broken out. It broke out at some point, and now it's just heading downwards. It's dominated by majority of it are bearish candles. Okay, as we move upwards, let's just now, okay, you can always move on to the 1 hour chart right there. You can see there's a bit of a corrective move here. So if you've got loads of hints to the downside at very high time frame, it's only natural to look at that correction. So you've got up and down, and it will look like there's a couple of upward type momentum at the lower time frame, but then it's building up to actually come downwards. Okay, these are all maybe corrective type move. Okay, so as you go onto the 4 hour chart, you could see it goes upwards, and then, I mean, compared to the 1 hour chart right there, it's got a downward momentum, correct? And then you go 4 hour, it's got that there, getting weaker. So, and then you got upward momentum as well now, but then it got stuck there at the 100 moving average right there. Okay, so here let's move on to lower time frame. Okay, 15 minutes chart, and then look into what's going on here. So if you're looking at potential downward momentum, here you've got a potential ABCD. Let's look at this one here. This may turn out to be a very nice one here, because if you get trapped and caught up there, okay, this could easily be an ABCD for you to the downside. That means to trade for a sell. Okay, but here it may be a little bit too early as well, because it's not coming under all these two lines or three lines as yet. I mean, two lines at this here is a trap area here. Okay, it's between the two lines. Let's wait until it goes under. Also, looking at the price itself, 1.2391. I mean, to the downside is 80, 80 to the downside is 70. So you will need to still wait until it goes under the 80 area, especially right up to the 70 area. So here, if I put a Fibonacci, let's say from here all the way down here to the low here, you can see that it's concentrated at the 50% area. Okay, so you can always see that the potential to the downside will be there. As we convert this one here into a geometric pattern, you can see it's an ABCD now, and when you do that there, you can see that center area is just too far at this moment. Not too far, but it's reasonably I would say far away from where you can be trading. If you're trading to the downside, it needs to be under this yellow line at 23. As you can see, it's 23.80. It's marked at the center point, so you need to go under. When you look left, for example, you can see that it found lots of support here as well. Okay, so has this support become resistant? That needs to be proven only when prices go under or lower and lower than this yellow line, horizontal lower line. Then you could see the potential of reaching this area here. Okay, or perhaps even find support around this area where the 200 moving average is. But in order for us to get a better bearish type momentum, we need to wait until they go under. But as I can see on the 15-minute chart, it's got bearish momentum, it's got lower highs. That's high, that's another high, but every one of it, they are lower than the other. Okay, so that's a good sign. You've got lower high and you've got lower lows, that is just giving you more. But I like to see and wait till I see the previous support becomes resistant and then go lower than the 2380 area. Okay, so 2370 and below, that will then confirm a bit more pull by the bears or the sellers to the downside. That's for the GBP USD. Okay. All right. As we go into the 1 hour chart right here, let's see whether I can see anything a bit clearer. I do see the potential of the Z-like pattern giving me some lower type movement to mirror this move here. Okay, so this is a 140 type movement. Okay, so let's see how much it has actually done. From there, you've got 40 or 40 plus. So you've got another 90 to 100 more if at all you want to mirror that movement downwards. Okay, because if you look into a Z-like pattern, the AB would then equal that line there. So you've got a potential for it to go lower, being driven lower by various factors, economic or geopolitics or anything else, to the 12294 area. Okay, so if at all I were to pull that Fibonacci from here right to the very top there, you can see that it's not too bad. It's not very, very far away from the 50 area right there. So, okay, it's not too bad. But let's look into what's going on. What could potentially happen in the Z-like pattern is again an ABCD pattern down. Okay, so if at all it's on the way down, it might find a bit of correction to the upside and then come down, because the Z-like pattern usually works that way. Okay, usually works that way. So I'll just get this one away. All right, as I've mentioned, we need prices to go lower. If not, it might just go higher again and then come downwards. But I would say that it's very close to a correction to the downside, because if this is a Z-like pattern, let's say, then you are looking at prices coming down. That's your A, B, C. So C to D coming down, but C to D coming down in the form of an ABCD type pattern. Okay, so when you see prices coming down and then it makes a bit of a corrective move upward, that may be your B to C area, B to C area, because you've got A here and then D around here. So again, you can sort of confirm that movement downwards based on an ABCD pattern. So hence the reason at this stage I like to wait till prices go up a little bit so that I can then short it once it made that corrective move to the upside and ready to come downwards. Then I could see a potential ABC to the downside, but the direction is still to the downside, even based on the 1 hour chart. But in terms of timing, it's not now. Okay, but if at all you're looking into a buy at this stage, you may be lowering your probability and increasing your risk, because in a pattern like this, it's best to ride the downward momentum, downward trend, as opposed to the upside. Okay, so let me just clear this one here, all these drawings here. Second. Okay, so here itself, as I zoom, let's say if I zoom in a little bit, this is still the GBP USD we're looking at this moment of time. Okay, right, so if I get all that away, you could see that there may be a potential of correction higher. Okay, so that correction, will it actually be, let's say, the 50 or the 61 or anywhere else? Let's say if it is the 61.8. Okay, let's say it goes up there to 61.8, or even the 50%. Okay, so let's just now get rid of that. So if I take that line and treat it as a potential ABCD from there, okay, oops, take it from there, you can see that it's there, but what if it's here? Okay, or even here? So basically, you could still see a sort of potential to the upside before you see that upward momentum, because at this stage, it's just flirting at this moment with the 38.2 area right there. So you've got another line here as well as your Fibonacci there. Okay, so there you go. You've got all these lines here. Okay, I'll get rid of this one. Okay, so you've got three potential. It has found the resistance at the 38.2 area. Okay, but look at how it's getting, weaker at this stage. So if I pull this A to B right here, take that all the way there. Okay, you can see that you've got another area that you could actually trade. So once it formed that nice move to the upside and then find that corrective move to the downside, you can treat it as an ABCD. Okay, but here let's just look into it more and wait till price come down more, because we need prices to confirm for us that it's not going to find support at this area here, but it will keep coming lower. If it does, and you find loads of GBP weakness as opposed, against the USD strength, then you've got a potential to find it here. But once it reaches the D area, then you may find the potential to go upward, because this is a bullish ABCD, or a bullish Z-like pattern, which then would signal an upward momentum once it reaches here. Okay. All right, let's now move on and look into, I think it was the USD CAD that I want to share with you on what I have posted on Telegram as well. So USD CAD, let's take a look at that. Let me tell you what I could potentially see based on the Fibonacci, based on the geometric sort of pattern. Let's just go on the 4-hour chart right here. Now, let's just look at that. Okay, now here, for example, we see some support going on here. Okay, but this is a rather tricky one, because those of you guys who are familiar with chart patterns, some of them are very familiar with flag and pole pattern, but this might trick the market a little bit here, because this may be, oops, I'm sorry about that. Let me draw that again. Some may look at this here as a potential bearish flag and trade the low side of it. starting from once it breaks out here. But again, this may also be an ABCD to the downside as well. Okay, so always you need to look into the centroid area. Hence the reason I treat this as an ABCD pattern and then look at the centroid to then understand whether or not I need to trade to the downside. So if at all it goes above the centroid and not under the centroid, then I know that this may be favoring the upside more than the downside. So this wouldn't be a sort of a downward type momentum. Okay, so here, for example, you've got support right there. It's coming upwards, right? So let's just look into the story of support resistance first in relation to the trend and support resistance zones and things like that. So if I go on to reducing the size or zooming out, you could see that prices is at 33.66. If at all it needs to go lower, it needs to go lower than 33.50. So I'll mark the 33.50 as the psychological level. Okay, 33.50. As it moves upwards, 33.66 and above, the one that would challenge it in terms of the psychological level is your 33.80 area. So you can always mark that too. So you've got 33.80. Okay, there you go. So here, for example, we've got 33.80. Now, again, price at this moment for USD CAD is a bit trapped at this stage. It may find resistance or it may not find resistance with the 200 moving average right there. That is the that is the 50 moving average that you can actually see. So that 50 moving average there needs to go above the 50, 100, and 200. So once it goes above, it may be going above the zone. So we need for prices to go at least above that zone to mark a little bit more bullish type momentum. But as we see the candles here, it does actually look like more bullish momentum is trying to pick up at this stage. So we need to wait till it goes even above or under these lines here. If it goes under and it goes under the 200 moving average here, then you've got that that sort of trend clarity to the downside. But at this stage, we need prices. We need prices to show us the best times. That's the two range of prices there as we go on like this. So here we have got, let's see, if I pull the Fibonacci on this area here, we've got it at that area there. Let's just pull this one here, for example. Okay, you can see that it's just hanging in between here. So it's not a very nice sort of Z-like pattern here, but I think I've shared with you differently on Telegram. But let's just look into lower time frame first to get a bit of an idea. And we go into the lower time frame, we can see that it's finding this resistance here. Would it then, this is a very nice sort of pole and then a flag to the upside. And again, it is giving that sort of possibility, but we don't actually know as yet, because if at all you're looking into this area, let's say, that would mark your sort of flag area, the upward channel. Okay, this is a channel up, and that channel up would then mark a bit of a potential flagpole pattern. That is your very nice pole area right there with the flag area right there. So then if this is the case, if at all it found a resistance and coming downwards, coming under all three lines and break out from there, then you get the potential of a flagpole pattern. Okay, so you can easily mark that all the way down like this, take that through, even just this part here if you wish. Okay, all the way there. So that is where it could potentially fall to as an alternative to the upside. Okay, so here, yes, it's got a potential to fall right down to the 13191 area, but again, we need breakout. We need it to break out of this area. Okay, and once, if it does break out, even to the upside, it may break out and come back to the channel area, and then up it goes. The same thing if it breaks out to the downside, it might test it again, and then down it goes. So you've got that sort of area. that you can consider of where it would break out to give you which direction, or break out to which side to give you that direction area. So this is what's going on at this stage. It also marks confusion for the USD CAD at this stage. Reason being, it's in the middle of all three lines, so it's not a good time in terms of trading as well. And I would only look into trading lower than that zone area for a sell, higher than that zone area for a buy. Okay, so at this stage, it is still a waiting game. Sometimes, if the market itself is in doubt, it's probably best. I know I say this quite a lot, but if the market's in doubt, it's best for you to also stay out, and you need to look into the zone that the prices or the traders are trading at this stage, and in that zone, it will help you decide whether it's best for which direction once it breaks out. Okay, USD. So let's just trace all drawing here. Okay, there you go. So as I zoom out a little bit, that gives you that idea of what's going on here. We've got lots of bullish momentum at this stage, so we need to wait. This is giving us a bullish momentum, and then it's looking like it's got a potential of a flagpole pattern as well, a bearish flagpole pattern. So things are not very consistent, or things are not very clear, because it's giving us a lot of potential patterns, but potential pattern may have a bit of a conflict with the rest as well. Okay, so shall we look into, let's see, we've got CAD, CHF as well to look into. So look into CAD, CHF. So I've got CAD, CHF here. Okay, here at a glance on the 4-hour chart itself, we've got loads of bearish momentum, bearishness under all three lines, finding loads of resistance and all that, and the dominance is by the bearish candle. As we go into the 1-hour chart, let's say, you find that that's the same story. It's giving you that bearish momentum too. Now, once you go onto the daily chart, it's again the same thing. So we've got quite a clear sort of direction for the CAD to the downside. Okay, we've checked 1 hour, 4-hour daily. Okay, we zoom out a little bit and see that. Let's just erase all drawings right here. Perhaps we need to check and look at whether or not we've got any pattern drawn previously. Okay, let's just excuse me. Alright, so clear that. You can see that on the 15 minutes chart, it's just loads of momentum to the upside. Of course, various other corrections as well. Okay, but this upside momentum, you need to look at the upside momentum, whether or not it gets weaker or stronger. If the upside momentum gets weaker, obviously you've got a stronger downside move, or the bias to the downside. Okay, or bearishness. So here itself, if we go into the 1-hour chart, okay, you can see you've got resistance, loads of resistance, and resistance again. So in this case, I'm just looking at more potential to the downside. You could easily draw an ABCD here, and as you go on A to the B right there, you find C at 38.2, which is brilliant. So then you can see that there is a potential for prices to go down to this price here at 7415 area. Okay, so this gives you a tentative or a probable type pattern that you can always draw. Now, once you've drawn the A to B right here, you can see that excuse me, the B to C has met this area of resistance there, which is quite good. So once you've done that, you can then draw your ABCD as such. So for CAD, CHF, you've got bearish momentum, you've got potential of a bearish type pattern, and that bearish type pattern, once you have converted that to a geometric pattern, you could then find out whether or not prices has gone beyond or under that centroid area. In this case, it has, so it is giving you some nice potential opportunity, excuse me, to the downside. Okay, so there you go. Get your ABCD to the downside there. So at this stage, with price alone, with price action always, if you want to catch that downward momentum, you would need to wait till prices go under the 74.50 area. So ideally, at 74.40 could be your potential sell type entry. Okay, 74.40 area. Okay, so that's a little bit lower right there. Okay, but then that's 74.40 and 74.30. So that wouldn't then give loads of space. So in other words, it should be hinting you that if at all you want to catch that trend, that's your trading area. The entry here, exit here, but that's just too small. It's 10 pips, maybe less if you count the spreads in. So in this stage, if at all you're planning your trade this way and know that this is your gap or window to enter, if at all you've not entered already, then you're looking into a too small gap to trade, which should signal to you that it's probably not the time for you to enter a trade or even consider this trade at this stage. But for those who have already traded and traded under that centroid area, you've got that area to target, which is 74.15, but 74.30 should actually be your exit area before the 74.20 psychological level. So for those who have already entered previously, they've got a bit of a room more. So from this stage here, right down here, you've got about 20 plus pips, almost 30 pips to take, if at all you've got the downward momentum to the downside here. Okay, but it does look like you've got loads of bearishness here, the CAD, CHF, but you want to always confirm that position fundamentally as well, based on news, economy, politics as well, for both separately for the CAD, Canada's economy, as well as the Swiss or Switzerland's economy, politics, and everything else, including the monetary policy, just to see whether or not we've got any threat in that area. If at all CAD is marked to be, pointing to the downside with its economy and everything else, then we've got a better flow, especially with Swiss franc building up as well. So you know that the CAD is weakening and the CHF is strengthening. If at all you've got that sort of information available to you and you can see that clearly, then you could see that the target for this area here is more possible for CAD, CHF to fall to this zone here. Okay, but again, you can always look left, you can always go 4-hour chart, you can always look into the price now, zoom out, and you can see what could the potential problem be, and that's what the potential problem be. Okay, so here, for example, you have got that price have rejected going down quite a lot at that level there. So look at this whole rejection candle here. This is a huge rejection sort of candle. Okay, it may not be such a clear type rejection candle, but again, it found that whole what do you call that, the whole fall left its body with just the skeleton of the wick, but then you got price now sort of really close to that area. Okay, so this is where it sort of fell to this point area, okay, and then it bounced up. So where did it actually bounce up from? It bounced up from, or stopped going down further at the 74.48 area, which is just 2 pips away from the 50 site number. So you would need to be very observant in going left. Always go left, always scroll to your left and look at what is going on at that level where prices are at this moment of time. So here prices at this very thin white lines pointing out here horizontally. You had got a bit of a support there. Okay, so prices is thinking, maybe price is thinking now, you need to go under that support zone in order for it to give you more hints to the downside. Okay, so again, you've got a lot of concentration of candle in that zone as well. You've got some support as well. So hence the reason we're looking into quite a crucial area to trade. So that is CAD CHF. Okay, so that hope that answers your question a little bit on CAD CHF, AUD JPY, and USD JPY. So let's just move on to XAU USD, which is gold. Okay, gold on the 1 hour chart. Now, gold on the 1 hour chart, we can see that you've got several zones that I've marked, and it is now within, has actually passed or gone under that resistance zone there, because we've got a big fall. Remember, this actually happened. Gold prices fell, okay, on the 6th, let's say, is it March the 6th, okay, and that fall has taken ropes and ropes and ropes there, okay. So that's how much it has actually fallen. All right, so 1197, it fallen down to 1197, okay, from this area here at 1236 down to 1197. Now that's a significant drop in prices. Okay, so we need to be very careful with that area there, because that was a drop zone. So is this another drop zone? And why is it that prices for gold is not actually moving upwards so much, but then has gone down a little bit more and found the resistance at that area? Because of that area there to the left. Okay, so as we go on, let's go on the 4-hour chart. We could see again, you've got sort of a trading area, a bit of a trading gap actually. So for those of you guys who are selling, not buying, for the gold at this moment of time, you could see from that area there, 1233 area, right down to 1227 area. It may be a sell type zone before it finds that support again at this area here at 1227 or 1225 area, because you've got prices went up there, some more support. As we go on to the left, you could see what's going on there. Okay, so this is basically the prices again pushed upwards at that stage, but again it's got a bit of a room downwards to find a cheaper or lower price to buy. Okay, so this is what's going on even in the market. You've got lots of parties who are very interested in selling. Now, this is what I want to share with you guys now. On the gold, on the 4-hour chart, we have got a Z-like pattern going on, okay, which is signaling, let me get rid of all these lines, a sell opportunity as opposed to a buy opportunity. The reason is this. Let me draw that very quickly for you so you get a bit of an idea. Okay, you've got that potential here, the Z-like pattern. Okay, this is a bearish Z-like pattern with the A here, okay, B here, right, C here, and D here. We are looking at D already sort of completed there. Okay, right, D. Now I've got AB equals CD, so that would be another area to project where D could be before it comes down, because a bearish Z pattern is like this. You've got A, B, C, D, and once it reaches that area, it comes downwards. Okay, so this area that it comes down, before it comes down to, usually you've got two ways of predicting it. One is AB's length equals CD, so AB's length equals CD. The other one is to pull your Fibonacci from B to C and look for 50% Fibonacci retracement ratio. Okay, so let's do that now one more time. This is just a rough sketch. We will use proper lines now. Okay, we will then draw that all the way up, double click that. Okay, double click, pull that one down here. That is one projection area. Okay, that's very close to where prices is at now. Okay, so you've got the CD leg there, right? So your AB leg, you could draw it once more. So AB equals CD gave you that first line. Now you pull your Fibonacci from B to C. Once you pull Fibonacci from B to C, you mark that 50% area. That gives you another area that prices could have, you know, reversed. Okay, so now with these two horizontal lines, you have got a zone. So that zone is really crucial. Why? Because that zone has also marked where prices has fallen in the past. Okay, you've got resistance, resistance, resistance. If we go on to the left, you can find a huge resistant fall of price all the way down here, as we've seen earlier on. Okay, so here, based on this Z-like pattern, I want to be very careful with the buy. So for those of you guys who say, yes, I would like to go and buy gold, I've got a very small suggestion for you with a big word, don't, at this stage. Okay, not yet. Why? Geometrically, yes, one reason. You've got political reasons as well. You've got a lot of things that are going behind the curtain, behind the scenes, not telling you that the central banks are buying gold. So for those big boys who are buying loads of gold, they wouldn't want to buy at high price. So they would like to push or pull prices a little bit more lower. Now, we've also got all this inflation, hyperinflation type scenario going on in the States. Of course, everybody's looking at the dollar going up and up and up. So the question is the economy strong? The answer to that is no, because inflation actually means you've got a lot of money printed, a lot of money flow coming in, but the value of the real dollar is actually very, very low. Like I've mentioned many times in the past, it may be very low and close to the value of toilet paper, our $1 bill or any dollar bill, especially the US dollar. Okay, so this is what's going on. Now, you've got A, B, C, D. What I'm expecting to happen is for prices to fall. Okay, because we've got D point here, we've got C here, we've got A here, and we've got B up there. So AB equals CD right there. So we're expecting some fall to happen, but don't take just my word for it. You need to wait for prices to go under the last line there, under 1229 and below. So let's just wait a little bit more, under 1229 and more, then you can actually look into a potential sell. If you do sell and would like to look into a potential take profit zone for the sell order later on, then you can always pull your Fibonacci. Oops, give me a second. Pull your Fibonacci from C to the D, if that is your D. If it hasn't actually moved higher, then you can choose your 50% area as a safe potential area for your take profit for your sell order for the gold. So at this stage, sorry to burst your bubble, if at all you're looking into buying, because I know I've got lots of requests, or not requests really, they're just questions asking me of whether or not it'd be best time to ride the bandwagon of buying gold. Actually, no, because the investors are not doing that. The retail traders are trying to convince themselves that it is good time to buy gold. Why? Because they have heard a lot about gold going up, a lot of things about how it's going to crash in the US economy and everything else. So that may be true, but for this time, in terms of timing, it's not the right time. We trade in stages, we look into patterns, geometric patterns, and this is what it's telling us with a lot of other backings as well. There may be a potential of a fall again for the gold. And we are looking at the 4-hour chart, so this is quite a significant type fall from 1229 to 1214. Okay, so that area there. So we need prices to go under 1229 first. Once it does, and then you've got lots of fundamental geopolitical factors and all that supporting the price of the dollar going up, then you know that we've got more fall expected for the gold. Okay, so that is basically what is going on for now. Now let's look into the other pairs. Let's just go back to gold first. Sorry about that. And we will erase the drawings right there and maybe go on to the lower time frame to look into the potential of what's going on. Let's see. So here, for example, we've just got all these trap type prices, not giving you a clear indication in the 15-minute chart. We've got upward type momentum at this moment of time. Now, a lot of retail traders as well, it's paying a lot of attention on these long candles and this higher high, higher low and all that. And hence the reason I like trading with patterns, so I can look at the big picture and see where it could potentially correct itself. Now, if at all it corrects itself and come down lower and then find a bounce, only then you got a second type pattern A, B, C, D to the upside, and then you could actually then look into a potential to the upside. And again, you need to look at not only the upside potential and the take profit, but where could it potentially fall as well. Okay, so if at all it comes downwards, let's say to the downside, like I've mentioned, you've got 50% to take of this C to D move. Now, if it does on the 50%, let's say this area here, you could see that all these zones are marking a lot of areas as well. So this is a big fall zone. we've got second fall zone here, another fall zone here. Okay, so prices has gone down, and again some more fall zone and some more fall zone. So will this, if it does come down, let's say, and bounce upwards, it's still a very good thing, because then it means that your fall zones or your resistance has now become support. If it does become support later on and come downwards to this area, let's say, you can simply draw this one here all the way, and this would then mark your W-like pattern. So once it falls and then it goes upwards, you've got the limit there. This would be your D point, this will be your C, this will be your B, this will be your A, and this will be your X. Okay, so we'll talk about that one later on, but now we're looking into the fall down to the 12-14 area. Let's look at whether that would happen or not before it could take prices upwards. Okay, so this is the scenario for gold on the 4-hour chart. You can always look into, if we are looking at the fall, you want to look at the ABCD, bearish ABCD in a lower time frame. So can we find that? Let's do that very quickly. Okay. We're not really looking into any potential patterns ABCD coming down at this stage, but we need to monitor price. Okay, there's just no opportunity for selling in short term at this stage. So let's take a bigger fall later on, but we need all this to confirm. If at all it's just going to go up much more, let's say breaks out in this area, you need to look at that falling zone as well, just to make sure it doesn't trick you into breaking out and then a big fall downwards. Okay, you need to be very careful with that. Okay, so GBP AUD has actually crossed or gone under the centroid area of 163.700 area, 1.63700 area, gone under it, and then we found some resistance as well here, and it's on its way down still. Okay, so I'll get rid of this, I'll get rid of that. Oops. Okay, and let's look at that, and the potential is to look into 1.5590 area. For those who want to be a bit more conservative, you can always look at the 5610 area as your potential take profit, in order for you to respect that psychological level of 5600. Okay, that's 5590, so you've got 5610 as your potential take profit. For those who are selling, again, it may mirror the GBP. So you need to combine what I mentioned earlier on with the AUD USD as well. Look into the trend for the AUD. So if at all AUD is looking like the trend to the upside is persisting, or really wants to go up and up much more, then you can then look into the weakening of the GBP. But the problem here is that you've got two currencies in the same door trying to go to the same direction. So hence the reason why it's finding all this slowness with small candles downwards. And it's not just coming down at a nice 6 o'clock or 5 o'clock, 6 o'clock angle down. It's just making that angle is not a very nice angle to consider a strong downtrend. That angle is a very, it's just past the 3 o'clock towards the 4 o'clock, not even 4 o'clock. Actually, because that angle is just giving me the downside bias maybe, but a very slow, uncertain, not yet holding out type move. Hence the reason it has actually stretched out that far as well. Okay, so this is what's going on with GBP AUD. Let's see anything else. Okay, so let's look into other sort of currencies. Okay, you've got the Australian 200 there, you've got the US 30, that's Dow Jones right there. With Dow Jones, it's just way up, 12 o'clock angle all the way through. Okay, so that's just all the way up. Okay, and let's just look into other pairs at this moment of time. I would like to just share with you the AUD and ZD that I have actually shared with you this morning on Telegram, giving you the signals to the upside. Okay, but this one here now it's still showing some support. Of course, has gone down a little bit. You know, it has shown some what do you call that, bearishness. Just hours ago and stuff like that, but it's still giving us upward sort of momentum, finding support at these either one of this line. Let's just look into clarity. Do you have more clarity at which time frame? At this stage, 4 hour giving you some clarity, which is not bad at all. It's above all three lines. Three lines is they're not touching each other. They're just not how you call that, intertwined. They're not tangling. They're not tangled. Okay, the three lines that is very important. Then it's pointing to the upside, nice separation of gap between them, and then you've got all these candles above all three lines. So here on the angle wise is just very close to the 12 o'clock types, 1 o'clock and above. Giving you loads of momentum to the upside in AUD and ZD. So it is actually, from the trends perspective, is giving that momentum to the upside, and it is actually supporting what ABN AMRO is actually talking about with AUD and ZD to the upside. Okay, it is giving a lot of bullish type momentum. Would it be from the 1 hour chart itself? Let's see what's going on there. It is a little bit unpredictable there at this stage, trapped in between the 250 and 100 moving average. We go lower and we could see that's just giving more correction, let's say, to the downside on lower time frames. Okay, very uncertain at this stage on the 30-minute chart. Wouldn't say uncertain per se, it's finding support though, but it is trapped in between these lines. So I would like to always look for clarity, and the clarity that I can find is actually on the 4-hour chart for the AUD and ZD. So 4-hour, daily, okay, weekly, you've got a bit of a stop there. Okay, it needs to go above. So you have got that trend line right there all the way down. Let's see. Okay, that's one area. And let's look at what's going on the 1 hour chart with the prices now. Is it respecting anything else? Now here you have got that a bit of uncertainty there, but I would say the 4-hour chart is giving me good clarity. Daily chart, weekly chart, daily and 4 hours, just giving me that gap that I can see some more room to the upside at this stage. Okay, so if we pull that move, most recent one, all the way up, you can see that it's beyond that 2618, so giving us some room to the upside. But as we minimize, look at the thread area, whether you've got the resistance right there. Okay, that one there. So let's just use that area there as a potential zone that we can mark. So you've got that area there, you've got that area there. Okay, and if we pay attention to this one here, we've got a zone right there too. Okay, and lowest body, lowest angle, lowest wick. So you've got another zone right there. So again, we can see that this confusion zone is working out very well with the AUD and ZD as well. Okay, so that is why you get prices to play around like this. So you need prices even on the daily chart to go above that zone or under that zone to give you more clarity. Okay, I think I've got questions right away. All right, here you go. NZD USD. Sure, Sashi, no problems. Let's just look into NZD USD. So what's going on with NZD USD at this stage? NZD USD, okay. There we go. All right. Okay. Now, on the we're looking at the 15 minutes chart now. It's just giving us a very what do you call that, quick view to the upside straight away. Found support here. It's above all three lines. As we go on to the 1 hour chart, is giving you that support again, upward momentum. So you can find that the two currencies I've mentioned, AUD and NZD, is just the one that top movers are paying a lot of attention to, and they are actually to the upside, as I've mentioned earlier on. So both NZD is stronger than Australian dollar and NZD both are strong, but then if you compare the two, NZD is much stronger than the AUD. But at this stage, you're comparing NZD, which is the strongest at this stage, and you can see there are top movers as well paying a lot of attention: NZD, USD, NZD, CAD, NZD, CHF, and they are actually buying NZD versus most of the pairs. So we've got a lot of strength at the upside for that. This is showing a little bit of reflected at this stage with loads of upward type momentum. It's finding a bit of a resistance at this stage with the 200 moving average on the 4-hour chart. But let's take it one brick at a time, one time frame at a time. So you've got your 5-minute chart building a story, and then you can see that prices, you know, it did actually find corrective move, but then as you see, it's got higher high, higher lows, higher high, higher lows. We got higher and higher and higher on the highs, and higher lows as well. So the lows is getting higher too. So that is then giving you that what do you call that, the momentum to the upside. Now, if this candle here that you see on the 5-minute chart at 7043 gone a little bit higher, that means that the resistance here and resistance here has become support, and that would support prices higher. Okay, as it goes higher, let's say, then it will make that support area stronger, because you've got a support area here. So if I mark, let's say, just based on the 5-minute chart, what's going now, then you mark that resistance there, okay, resistance zone there, okay. So here, and then you would automatically look into that upward zone, upward support zone there as well, Mark. So I think it's probably best for us to base on price action and only consider upward type momentum at the 5-minute chart once it goes above 70.50. So 70.50 is your sort of area, because now price is at 70.40. Okay, so 70.50 is where it's closest to at the moment. So if you type your 70.50 area, okay, 0.70, oops, 0.7050 area, that's your psychological level. Okay, so it needs to go above that area right there. Okay, so here, when we go onto the 15-minute chart, it found support and it's trying to move higher. You can find that the dominance are by the bullish candles. You can see that, and the bearishness or the correction to the downside is getting less and less. So here, 15-minute chart is building onto the 5-minute chart story, telling you there may be some what do you call that, desire by traders to move to the upside. When you go into the 30-minute chart, that story persists, and again you find support right on the dot of the 50 moving average, and then again you've got that dominance of bullish candles there. Of course, now you're finding that resistance right here, but again it needs to either come back and find support in this area here again where it found support, because you got strong support here, not too bad. Okay, and if it does come back down, find support again, then you know that there is a battle between buyers and sellers, but then the buyers may be more persistent. Okay, so this is what's going on. So let's look into the 1-hour chart now. Now, this is where you need to be quite careful. The reason is, when you look left, there has been a history of a fall. Okay, a history of a fall. So that history of a fall needs to be respected, because it's got to do with price. Okay, because of price. Now 7044 area, and that fall has actually happened at the 7045 area, which is very close to the 7050 area. Okay, so this zone, you would need to pay a lot of attention with this zone. Okay, and once it has actually gone up to 7060 and above, that means the resistance has now become support. But if not, if it comes under 7030, I would pay a lot of attention with the 7020 area. Okay, come lower and lower and lower, and come under 20 by 10, then you've got some potential to the downside. But as it actually comes down to the downside for NZD USD, has got more challenges, because you've got the 3 moving averages, and it will find support there as well. So at this stage, the biasness does look, even on the 1-hour chart right where, as we speak right now, does favor the upside much more than the downside. But not at the right price at this stage because it is at 70-40. 70-40 is not really a good price to buy. We would like to buy where the other people who are prominent or at a better stage of buying 70, 50 and above. So why would we want to buy now? It's best for us to buy at 70, 60 and above, and only when we see a potential of a pattern as well to confirm that our buy decision or buying decision is actually a good buying decision. Okay, so let's just clarify that a little bit more. Okay, so we get a bit of an idea. Okay, I think we've actually gone past 4, now it's 4:45. Okay, so let's just do that very quickly before we wrap up here, NZD/USD that is. As we go on to the 4-hour chart, we find that resistance there. So if and only find that power to go higher, you still have got that gap to buy the 50 and exit before where the 200 moving average is, which is the 70-60 area. When you find that gap, you can then realize that it's not really a gap worth buying anyway, correct? Because it's just too small a gap. So hence the reason we need to wait on that. Okay, at this stage, there may also be a chance on the daily chart for you to look into that ABC very, very big fall. But at this stage, we need to understand that the NZD is picking up or not. But as we go to the 4-hour chart, it's just looking like it's got a bit of a rejection candle going upwards. So we need to watch this one. I've mentioned many times before that it's best for us to look into a strengthening pair, not just a strong pair. This is what I mean, because strengthening pair is what is going to become stronger and giving us more opportunity to buy so that we've got a gap to take profit. Here, it does not look like a big gap because people have actually bought. NZD may have actually gone up, and now it's sleeping time in NZD. Okay, in New Zealand, for example. So there's a lot of buying has taken place in Asia and everywhere, while NZD market was actually very active earlier. So look at the amount of the profiting that has actually happened on the buy side. Okay, so people have bought and bought and bought, and has actually driven prices for NZ close to the average movement per day already. So at this stage may not actually give us more opportunity to the upside potentially. From here, from technical side of things, we're looking at candles are rejecting very close to the 200 moving average. It's just not giving that push like it gave us that push of NZD to the upside like this morning. Okay, so we need to actually wait and let prices marinate further based on the psychological level. Okay, let's look at questions now. Give me a second. Let's just do that. Sorry to keep you waiting there with your question. Okay, let's look at it. Okay. Mr. Kunan, yes, we can go back. We can go to the Euro JPY. Let's look into that on the EJ. Yes, it's a good one. I've mentioned that earlier on. So EJ, it's about positive 0.30 plus percent to the upside. So there's a lot of movement appreciating to the upside for the Euro JPY. Okay, so let's look into Euro JPY. Let's look at that. Okay, there you go. All right, Euro JPY. Let's clear off this first. Let's look at all this mess here. Okay. All right. Now, 4-hour chart we're looking at, there was a sort of W pattern drawn. Now the W has completed a D area as expected. It has actually fallen from D coming downward. Move, we are looking at the 4-hour chart this moment of time. There may be a potential A here, B here, C, and then further down D. But let's look into the trend at this stage. Let's also get rid of all these ones here, so we get a better look of the trend as well as the pattern. Okay, let's start with the 1-hour chart. Let's look at what's going on. Now, when you look into the euro at this moment of time, if you see that versus the yen may actually pose between now and the medium term to be more reliable in terms of safe havens. Okay, so you've got geopolitical factors, and then you've got that flow still of assets going into, or funds going into the yen. So that might then to the upside. But again, what would then pull the euro down against the yen would be the geopolitics and the politics that's going on still in the eurozone, which is looking at all these parties, protectionist and populist parties winning, and looking at more of them winning or potential to win. So now they're talking about the Frexit, which is the France exit. They're talking about the Brexit things has already happened, of course. Then you're talking of all other kinds of exit, the Italexit as well, which is the Italian exit. So with that, with all elections going on and things like that, it is still driving that down, the euro versus the yen. Okay, so here you can see that reflected on the 1 hour chart. It went downward a lot. Okay, of a potential reversal right there, but again, it's not daring enough to pierce through the 3 moving average, and it's just gone just below, and it found its resistance sort of. Okay, so you want to look into that as a potential ABCD. You can do that, and you can always pull that one all the way down this way. Okay, and then double click that all the way down that way, highest point right there. Okay, so here on the 1 hour chart, that looks quite good to me on the ABCD. Okay, but always marry that as much as you can with the current political situation, especially with the eurozone. How weak would the euro actually be pulled? Politics, that's very important. Okay, but again, more important than that is your centroid area. Now look at the centroid just on the dot. That's where they found support at some point right there, where the needle just spiked through and then touched that centroid area. As you go there on the left, you find that that centroid again has been just poked once right there, again there challenged. So this is quite a good centroid area. So in other words, if you want to trade to the downside, it's best for you to trade a sell under the centroid area. Now the 1-to-1-1-1 area, okay, let's get rid of that one there. The 1-to-1-1.11 area is simply too close to 100 area. Okay, so 1-to-100. If you are looking at selling, it's probably best for you to look at 1-to-090, okay, and below, or 1-to-070. Okay, there you go. That's a better selling price here. Okay, a better selling price. Now your take profit area is at this tip area here, okay, of the D point, marked at 119.99. Okay, so 119 is very close to 120. 120.10 would probably be a better area for you to consider. So 120.10. Okay, 120.10 would be a better take profit area for you right there. Okay, so here we go. So 1-to-100 is an area to watch out for the psychological level, but your selling area should actually be 1-to-090 or 1-to-070. Okay, that gives you about 70-60 or 70-50 pips or so of potential once you enter rightly. But it's a case of waiting. You've got some resistance there. It's got a bias to the downside for the Euro JPY, with the things that are driven as well, with the yen that is driven still to the upside of all the political risk that is actually happening. Geopolitics as well is still having yen. So this may actually be a good trade to the downside as well, but the advice I have is to wait till prices go under the 1-to-110 area and below. Better still 1-to-100 and below at the 1-to-090. And then aim that at 1-to-010 or so. Okay, so that gives you 70-60 plus pips or so, but at least you are at a better price based on psychological numbers or levels, and you've got that gap that increases your probability a little bit in terms of price action, especially in the psychological level. Okay, so that is quite a good centroid as well, and it is actually having lots of levels that are respecting that centroid area. We have got all these concentration of prices finding support, finding resistance at that centroid area, and this is a very good sign. That's why I've mentioned earlier on as well, you need to look to your left, not only based on support resistance lines, but also on the centroid of the pattern that you have drawn as well. Okay, so you want to always look into that. Okay, so that's basically on the Euro JPY on the shortest term, looking into the 1 hour chart. At the 4 hour chart, it's just, you know, the prices in between all three lines is not giving me that good indication of a clear trend. Okay, so that's why it's not, you know, it's probably best for you to look into the shorter time frame for now, and look into that because you've got candles under all three lines. So that is a clearer bias to the downside. But the other time frames, let's say for the daily chart as well, you know, we just need more confirmation, more movement to the upside to find that support as well. But here we are just looking at potential based on what I've just shown you earlier on the ABCD to the downside on the 1 hour chart. That seemed to be a little clearer at this stage, but not clear in terms of price. Okay, so hope that is clear. I would then, if at all, trading the Euro JPY, find the pattern on the 1 hour chart that you can see. It's clearer as well. It's making you feel a little bit better compared to the other time frames. Okay, so again, this is a waiting game. At this price is at 1 to 1.23. We need price to go under the 20 side number, and at the same time under the centroid area, which is a very strong centroid area. So we need to respect that price, since prices have actually respected it many times over in the past. So under that centroid will be a better trading area for a sell. Okay, taking profit at 12010 and above. Okay, so hope that is clear for you, Mr. Kunan, on the Euro JPY. I think it's probably best for me to wrap up here, and because it's already at 5 here, just 4 minutes before 5 o'clock. We've started at about 3, so that's a good amount of time. 2 hours sort of webinar. Now, any more questions? Just before, I could still give you about 5 minutes or so. So if you've got another 1 or 2 pair, I don't mind. If you're getting late for some of you in other parts of the world, so do let me know. If you've got no questions at all, any pair that you're not wanting to look at it at this moment of time, then we can wrap this one up and meet you on Thursday. Okay, questions at all, guys and girls, ladies and gentlemen? Any other questions? No more? Shall we then end it here? We've got brilliant. Thank you, Sashi. Thank you very much for that. Okay, we've looked into AUD and ZD already. And we've seen AUD and ZD previously, Chris. Okay, and let's see this. Okay, we can always take a look at AUD and ZD one more time. Let's just look at that one. There you go. So here I've ZD earlier on. So this is the zone that I would like to just make you be aware of, and this is the zone that it's in within that confusion type zone at this stage. Okay, so this is the zone. Okay, it's between that. The prices is trading at a range at this moment of time. Prices is at 1.0966 at this stage. I would prefer for prices to go under 1.0911 below. As you can see, under this zone here for a downside momentum, above this zone here on the upside momentum. So these are prices that you would need to take into account. Very significant zone as well. As we go onto the daily chart, you can see that this is what's happening, right? You can see that that's what's happening. That's your confusion type zone. So I'll just insert the rectangle there. The shape. Give me a second. There we go. Okay. So this is an area to really watch out for, that zone area. Okay, because you see how prices have respected that zone almost very perfectly. We've got all these areas there. Okay, challenge, whether it's in within the zone or just at the borders on the top side or the bottom side of that zone. So here we want to be careful. So anything that goes on in there, within that zone, is still considered sort of like a range thing. It's found sort of a bit of a rejection candle now here. Okay, they found that rejection, that it rejected the price there at 1017, which is very close to 1020 psychological level. So I need prices to come under. It has rejected that, come under, and then it would then give us a little bit better idea to the upside. Okay, so if I pull, let's see. Okay. Let me just see whether we've got a clear sort of pattern there. Okay. All right. It may actually be a potential Z-like pattern here as well. Okay. And then, oops, sorry, not that one. It's too long. Here we go. Yeah, this is based on this one here. So that may be a potential. Okay. So I'm taking into account this one here. There you go. You've got a potential of prices dropping downwards, but again, the drop should actually be only if it goes under this area here, under the 1.0911. But again, if at all you have got that not hate, but rate hike possibility not happening for AUD, for Australia, and they're just use the rates and decrease the rates for the AUD to sort of pump up the export and everything else, then you would see that the NZD would still go higher, but the AUD go lower. And if that does actually happen, we would then need to monitor the prices to go under the 1.0911 area. So if that does actually happen, then you've got a better potential of prices coming down to the 1.0693 area. Okay, so that is an area to look out for, or 1.0700 area. So 1.0700 is again a very significant area to watch out for. Okay, so if at all it doesn't actually go down to 1.0698, we're looking at 1.0700 area as the psychological level right there. Okay, so this is basically it. At this stage, it's a more wait and see, and that zone is still a confusion zone shaded in blue. So I would prefer for prices to come lower. If it does come lower, it may then make that Z-like pattern here to work better. And if it does, then you've got a better potential once it goes under that to make that. What would then happen is, I would guess that if prices were to come downwards, it might then start to find that resistance right where it has broken out from, and then you will find that A, B, C, D potential to come downwards. Okay, so at that you can then treat that as an ABCD, find your centroid, and then you can trade that down. Or just wait for prices to come under that box and tweak your prices based on psychological levels before you enter your trade. Okay, hope that's clear. AUD and ZB, that's been covered for you, Chris, and for you guys as well. So hope that's been okay and that's been clear. That's brilliant. Most welcome, Chris. Okay, guys, so I think I'll better wrap up here. So we've got a good 2 hours webinar today, which is brilliant. I enjoyed it. If you guys did as well, I would be very happy. So hope you guys enjoyed that definitely, and would love to see you again on Thursday. And that's our next, so that's my next webinar with you guys from Singapore, if I'm not mistaken. I'll be in Singapore at the time, so I will still be able to conduct the webinar on Thursday as well. Okay, but from another place, another location. All right, guys. So have a very good evening. I'd like to say a big thank you for attending my webinar today, and thank you for hanging on with me for 2 hours today. Hope that's been useful for you and beneficial, and we'll see you on Thursday. Once again, thank you. Have a very good evening, and bye.